Hello, everybody. I hope everyone is having a good day. So, I always had a passion for finance and to come up with different strategies and try them. When COVID hit, I was working from home after that, and that opened up some time for me to go and try different strategies and basically to give it a chance to try my passion. So, uh, you know, if you go on YouTube and you probably have seen a bunch of videos, a bunch of these uh, companies who claim that they will teach you how to trade. They have different trading strategies. Some of them are day traders, some of them are options, and so on and so forth. Technical trading and whatnot. There are a whole bunch of them, right? And they come and claim that they make money, and then uh, they have these courses that you can go and enroll, or they have some subscriptions that you can pay, and they will basically immediately send out all of their trades, every trade that they put, they send it out through text message, and you can put the same trade on. So there are a bunch of these companies out there, and I myself had a bunch of ideas, and I have my professional background is in computer engineering. I'm pretty good at math, and I'm also good at programming, uh, and and I knew something from finance when I was in grad school. I was very much interested in finance. I took some courses, some advanced courses, and since 2010, I was always on a daily basis following financial markets. So, if you know how they say, if you spend 10,000 hours on a subject, you are a master of that. I definitely spent 10,000 hours on that. And so, like I said, after COVID, uh, for 2 years, 2 full years, I basically all the way up to recently, I got a chance to go ahead and code and program all of these strategies. Okay, and I could also subscribe to some of these companies that would issue their trades immediately, and I could put them on. So today in this video, I'm going to kind of summarize the result of 2 years in, I don't know, maybe 10 minutes. Let's see how it goes. So there are few things, few schemes, right? First is the subscription. So there are these companies, trade with Mr. X, or whatnot, right? And I bought the subscription because, like I said, it was my passion. I was ready to spend a little money, pursuing my passion and see what happens. So I bought some of these subscriptions. So some of these guys, first of all, they don't make money, and I bought a couple of the most popular ones, and I got one for 1 month full. So I usually paid for 1 month or 2 months of full subscription, and and I trade them with So I trade them with real money. All of these are implemented with real money, but I stayed small. Uh, so uh, so and none of these made money. So I took all of their trades, and the result was that it was zero profit essentially, and I just made it even. I just broke even. That's it. Uh, and it's interesting that some of these websites, they even put out their trades, and then they put out a number that if you would have taken all of our trades this month, you would have made this much money. and that was a lie. In fact, no, I don't know if it's a lie, miscalculation, an error on their part. Because, for example, in one of them, I took all the trades. I usually take, not usually, I always took all the trades because I want to see exactly what I will get. And in one of them, I took all the trades. I broke even, but they claimed that on their website that if you traded that month, you would have made like some $9,000, so which is completely wrong. Among all of these, popular websites, only one of them might have worked, and but the returns, they were minimal, and that was a particular website that was trading options, and the return was minimal, and it's kind of wasn't worth my time really to be alert, always, and have your phone so that as soon as they put a trade, you go and quickly put the same trade. And the other problem is that the options market is not as liquid as the stock market, right? So in options market, when a bunch of people go and at the same time they want to put the same trade, the option price quickly changes. And interestingly, as I would get the alert from these from this particular option trading website, I would go to put the trade, but guess what? The price was already far from what they have traded for. In any case, it wasn't working very well. Like I said, I might have made some money in that, but again, it was some minimal amount of money. So these are the subscriptions. So I'm putting this video on because I don't want you guys to do the same thing and go waste your time. So I had a passion in this. I tried a bunch of schemes, but this may help other people. So second group of these trainers was the ones that were so-called experts in day trading, and they were trading based on some fat bars, or dojis or whatnot, trade the open of the market, etc., etc. If you search on YouTube, you see a bunch of them. Theirs I did not subscribe. However, their schemes, they were pretty clear from their training. So what I did, I programmed, and I programmed exactly what they were talking about. I actually developed automated trading program that would start the machine at the beginning of the day, and it would go and fetch data on some 200 stickers on a minute basis, and then would execute the strategy. And guess what? Even in this case, I barely broke even, I think. I think the programming and everything, and trying different modifications, it took me, I think, maybe 6 months or 4 months. And in all of these cases, when I programmed, since I already programmed the main thing, the main strategy, I would always modify it afterward. When I see, when I saw what the strategy wasn't, a certain strategy wasn't working, I would modify it based on what I was seeing, right? And or based on some ideas that would come to me, and I would try it again and see if it works or not. So none of the main strategies, the original ones, plus my modifications, none of them work essentially. So which is very interesting. And I came to conclusion under this category, the category of day trading. I came to the conclusion that the big names, such as Renaissance Technologies or Citadel, like those companies that have AI algorithms, right? They run massive machine learning and statistical algorithms. They have a lot of data, historical data, right? They essentially control the market, and it is essentially saturated. So they already trade to the capacity. And in fact, even those companies, they cannot deploy all of their money into day trading strategies, such as Renaissance Technology. Their day trading strategy, they can only deploy about $10 billion. If they go above that, it's going to be them trading with themselves, so it's not going to be profitable, right? So that was the impression that I got in the day trading category. So that's that. Then after that, there are a bunch of option strategies, right? So we're talking now about the option strategies that you can find online on YouTube, particularly. They advocate selling covered calls, and they actually advertise these a lot to retired people. Uh, so I was thinking that this particular strategy, since the people who were talking about it, they looked more legit. So I was really thinking that these option strategies should work, should make some money. So I was actually hopeful on these ones. So there are different strategies such as selling covered calls, right? 1 standard deviation, 2 standard deviation, different days to expiration, 30, 42. And some say, to keep them under expiration, and some say to manage them, halfway through, or when the profit is half the price of the option. There, you can try, right? Once you have the program written for these, for a particular ETF, a particular stock, then you can try all kind of modifications, right? And I did. I was particularly interested in Nasdaq, and S&P and gold, and the same thing for some of the top stocks. I tried it. I wrote the code. In some cases, I bought data. Like I said, again, this was my passion. I didn't mind spending a couple of $100 here, there, maybe $100, maybe $50 to buy extra data. Data is very important in testing these strategies, right? So I bought or I tested these on whatever data that was available to me. These companies that do market making for these, such as Citadel or other companies, I'm sure they have more data. I'm sure about that because, for example, for Nasdaq volatility data, you only get, I think, from 2001. However, I could find papers, scientific papers, that were written, and in those papers they had the implied volatility in 90s. So that means that they could get it, they had access to it, and I did not have. If you go to these some of these famous websites such as TradingView or others, you will see that you will get the volatility data for Nasdaq. I think you can get it from 2001 and after. But like I said, these companies that do the market making, they have access to more data than you. Now, I want to under option strategies, I just want to kind of summarize it for you before going into these bullets. I like to summarize it first. If you see a particular option, a call or put option, is being sold or bought at a particular price, that is because that market maker who is doing it, right, they have the data, they have the volatility, they have a bunch of historical data. They know that if that is the price for the option, all right, they are not going to lose. Essentially, the expected value of loss for them is going to be 0. Okay. Again, if you see a particular option being sold at a particular price, right, it is because the market maker has already calculated, right, according to the historical data and the volatility, that their expected value of loss would be 0. Okay, if not negative, right, would be maximum 0. All right, and that's why they are selling, or they're offering that option, a particular option at that price. All right, so you can't beat that. All right, just simply mathematically, you cannot beat that. All right, again, it might sound obvious now that I'm saying it, but but a lot of time you have to go and you have to do it the hard way, or you have to learn it the hard way. You have to go and do the testing, do the calculation, and say, oh, okay, yeah, there's a reason that that the market maker is selling this option at this particular price today, right? And I did that. So so that's that, all right. And if you go into, if you're active in the options market, you will see that 99% of time, maybe more than that, the options are being, the bids and ask volumes, they are like 40-40. You will see 9-9, 11, and they change instantly. Basically, the same amount of bid and ask are there. So essentially, the options market is completely under the control of market makers, right? Uh, so then that should give you an idea what is going on, right? That's that. So this is selling covered call. This is one strategy that is advertised to a lot of people, and like I said, I tested it, and it again wasn't making money. So the option strategies, it's very important to test them over a very long time. They may make money over 5 years, okay, but then at the 6th year, right, something happens, the price action changes, all right, and then whatever you made over the 5 years of the previous 5 years, you will lose at the 6th year, okay, or you make something over 8 years, and then at the 9th year you will lose it. And I tried these. They were making zero bucks essentially. That's it. So that's that. And selling one standard deviation calls. So like I said, when you have the original program, when you program the original idea, you can try all kind of modifications. So I tried selling for example one standard deviation calls when volatility was low, for example. I tested over like 20 some years. It wasn't working. Then I tested on when volatility was high, and of course when I say low and high, I tested over different values, different thresholds, right? Again, I have the program, I can test whatever I want now, right? Or when put call ratio is low, for example, I tested, again, nothing. And and I also tried a bunch of correlations. Okay, none of them worked either. Another strategy is buying. Another strategy that some people, again, advertise online. It's you can buy, at the money, very long-term calls, for example, calls that are with days to expiration of more than a year to expiration, and then you can maybe sell calls against them. For example, I tried this as well. It doesn't work. At the money calls or at the money puts. Okay. Now these options, the at the monies, they are also priced by the market maker based on the historical data. All right. So they have historical data. They know how much on average, right, the market will, or how much on average the price will change. Okay, in certain number of days, and then they price these at the money options accordingly. Okay, so again, the expected value of your profit of buying them would be zero. Okay, and but in any case, I tested that over a long period of time, and it didn't work. And now VIX options, some people do, is they are very dangerous. Also, again, I was interested. I was passionate about the whole field, so I wanted to try everything. VIX options, they were very interesting to me. They have a particular mathematical aspects to them which I like also. So I went into them, and VIX options for average person, they are very dangerous to trade, because they are essentially a derivative on a derivative on a derivative. Okay. But in any case, I tested them. Again, there was no money in them. UVXY and VXX, these two are borderline fraud, and they keep losing value, right? And in fact, there have been Congress hearings about these, and with people who are in charge of these ETNs, and Congress, they were objecting and complaining to the directors of these basically funds that you have lost some trillions of dollars. What's the purpose of your fund and whatnot. In any case, So these and they, so what they do in these funds, while they can make money, they run them, and when they see that when something dangerous is happening and they may lose a bunch of money, they decouple. I'll give you an example. Just in 2022, for example, VXX, which is very famous, right? They decoupled from VIX, and you can just Google that and you will find this is I think the first article that comes up. Barclays suspends sales of two ETNs after skyrocketing interest led to capacity snarls. So you can see here that Barclays reported that the reason for the halt stems from the fact that the firm currently does not have adequate issuance capacity to back further sales from inventory and any additional issuances of the ETN. So essentially, they will sell it to you while it makes money, and if it's if they see it's getting dangerous, they will stop it. And that was right after I think Russia attack, and at the same time Fed was hiking rates, so volatility was high. In any case, they just decoupled, as simple as that. So that's that. Now, all right. So these are the option strategies. Again, I could not see how money can be made. I implemented all of these with real money. However, I never lost much money because I was staying very small. I'm generally a defensive person when it comes to trading. So in any case, that's that. So now, what's the conclusion? The conclusion is that that I came to is that you are the product in these schemes. Okay, you and your liquidity are the product. So you bring the liquidity, and that benefits the market makers and the brokers. And if you have I had a pro account. I always had a pro account. And professional account. But most people, they have most people who are in Robinhood or whatnot, and they have an account which is not pro. In that case, you are definitely the product because they're selling your order flow, and to the market makers, and market makers, they are adjusting the prices and trades accordingly. But in any case, they benefit from the brokers and the market makers. They benefit from the liquidity that you're bringing, and they benefit from you playing the game. Right? Now, this I've been doing over 2 years. I just summarized it. Now, you may ask, okay, what I should invest in then? So I came to the same obvious conclusion. To the obvious conclusion that you should maybe own the stocks or ETFs long term. It's as if you're owning a company, right? And if you're owning a good company over a long term, you should be in good shape, right? And another option is real estate. Now, I myself never done it, but the math works out in real estate. And real estate, I mean buying and then renting. The math works out, and I know a lot of people, of course, who do it and are happy doing it. Now, if you're familiar with options, I just want to make a comment over here on real estate that it's very similar. Real estate is very similar to buying an at-the-money option. Okay, so buying real estate is just like buying an at-the-money option, and then renting it and getting the rent and paying the mortgage with the rent. It's just like selling, a car or a covered car, on that at-the-money option. Okay, so but now you can go ahead and actually compare, okay, this scheme with buying an at-the-money option in Nasdaq or S&P and selling covered calls. You can actually go and basically find the ratio of the price between the covered call of NDX, for example, Nasdaq, and the at-the-money option. And then you can also go and find the ratio between the rent, wherever you live, and the price of the real estate. If you are, for example, in Midwest area, where the housing is not that expensive, you will see that the rent will cover the price of your at-the-money option, which is the price of the house, okay, which is your mortgage. But in case of Nasdaq, it doesn't. The covered call doesn't necessarily cover the price of the at-the-money option. So so again, the math in real estate works better than the option than the option strategies. However, I haven't done this. I don't have experience in it, so I can't tell exactly how it goes. I know that if you're handy, it is better because you end up saving a bunch of money that you would have give to people to fix the stuff around your property. Now, third option is to start a business based on your passion. I think that's probably the best option. I mean, beyond owning stocks, if you have a lot of savings, of course you may not want to put all of it in starting a new business, right? But in any case, I strongly recommend starting a business based on your passion. Because just like what I did when it came to finance, I always wanted to try, and I tried. So if it works, great. Then you can continue your passion, and then it's your passion, right? So you're happy. You're a happier person then, right? And if it doesn't work, fine. At least you tried something that you are passionate about, and it's out of your mind, right? It's out of your way. So and you move on. So again, just like I did with finance, right? So this is another option. All right, just wanted to summarize what I got. You guys have a great day.